Be greedy when people are fearful. Be fearful when people are greedy by Warren Buffett. That's a great quote, Venkat.
That's
It's
right.
something related to what we're going to talk about today, right?
Yeah, like you guessed it right. I think it's investment. We are going to talk about how do we invest your money during this crisis. Like right now, we everybody is so fearful, right, about the money,
Right.
and they're just trying to get their money back from the investments. And a lot of people lost their jobs, and they just wanted to have some money. They even withdraw from 401k their
Right.
savings, right? Their
Yeah.
life savings. And so there are so many things happening. And this is, if you have money laying around, and just don't like throw it, like sorry, that didn't come out right, but don't throw it like this, and
Yeah.
see where it is sticking.
Yeah.
And rather than that, just invest, like do your research, and invest on the companies that are actually on sale, and it's going to grow like exponentially in the next maybe 6 months, 1 year, or 5 years, or 10 years. So you had to look for long-term investment on the companies. So you had to believe in those companies, and I think that's what we're going to talk about. Like we this is not a financial advice we are going to give today, but this is mostly for entertainment, educational purposes only. And this is coming from watching hundreds of videos online and reading hundreds of articles online,
And
right?
and also doing it yourself, right?
Right, exactly. Yeah, it's just self learning is nothing like I don't have a mentor or anybody. It's just but I did invest on a lot of money on different stocks, and then saw the growth and saw the market going up and down in different years. So I kind of learned in a harder way, but you guys don't have to do that. So that's what we
Okay.
are going to talk about today. The easy way. How do you take advantage of this situation right now?
Right. Right.
Yeah. So we saw that the code again. I'm just throwing it up in the screen again here. So that actually tells you most of the investors, the real investors, actually knows how to invest their money, when to invest, and those are some of the things that you have to watch out, right? So when people are fearful, that means it's most of the things are on sale. It's everything gone down, right? Right now the market is like 30 to 60% down anywhere if you look up, right? But it's actually the stock market last week went up, right? It went
You
up.
said on a specific date it went really
Yeah,
high,
it
and all
went
of a sudden
up.
it came down.
And March 20th, I think it was down.
March 20.
And then
Okay.
based on the news, it's so volatile right now. But
Right.
what we are going to advise you to is just pick those companies, right? Like, let's say 10 to 20 different companies, and then pick a index fund, right? So we would say 50% on the index fund. If you have even $1,000, right? Put $500 on the index funds, $500 on the 10 to 20 different companies.
Right.
Those are the companies that are on sale right now. It's not like Netflix. Like if you look up Netflix, it's a good company, but it's almost like 30-40% up actually compared to
Right.
other companies,
Okay.
right? Because everybody watching due to this virus, everybody home, and they start watching Netflix a lot, binge watching.
Right.
Right, so the stock went up. Same thing like Zoom, right? Zoom is the sharing,
Facebook.
everybody meeting, right? Live meetings and stuff like that. People start you know using that lot, and then it went up. I think it's 40% or something like that. So don't buy those companies. Do your research. And something like AT&T. AT&T was low, and Delta Airlines was low. Like we are not recommending these companies, but just giving you those points that you could actually
Based on,
look.
so what basically you're saying, Venkat, based on your research, right? Like you said, if we are not giving financial advice here.
Right.
Based on the research, right at this point, because the stock market changes like this, right?
Right.
And right at this moment, Netflix, like you rightfully said, because people were staying home and the stock, everyone watches it, so no, it's not a good time to buy stocks in Netflix. And AT&T and Delta, based on the research, they're good. And
Right.
just a quick, sorry to interrupt.
Yeah,
I just
no
want,
problem.
like for basic for the investors who are new, like who's someone who's really new at investing. If you mind explaining really quick what an index fund is? Maybe not really helpful for most of the seasoned investors.
Right.
If you can quickly, within a
Right.
few seconds, we want to
So
explain.
yeah, there are three things we might hear: mutual funds, ETFs, index fund. Right? Index funds are the most safest one. Then the ETF, then the mutual funds.
Say.
Most low cost. So mutual funds are the actively managed portfolio of different stocks. Stocks of, let's say, stocks of stocks, right? So what happens is it pulls like 100 different stocks together, 100 different companies together, right? So you're investing in one mutual fund, but under different companies there. But there is a fee involved in there, right? With the
Okay.
mutual funds. So don't go with the mutual funds. ETFs are exchange traded funds, and the index funds are very similar, but the ETFs acts like a stock. It combines, let's say, 10%, 10%, 10% of 10 different companies and put it in one ETF. So it's like a one stock
Okay.
ETF. But index funds are the same way, stocks of stocks, but it's like based on the index of the market. So it changes, it fluctuates.
Okay.
And most of the time, it's always you win in index funds. The best part is index funds has a very low 0.00 some percentage fee, and so you won't even like pay any fee because it's based on the index. It's automatically adjusted,
Okay.
and in the long term, it's you get more return on your investment. And for example, S&P index fund involves like 500 different companies of US, right? Top companies. So if you invest on the S&P, Standard and Poor invest the S&P 500 companies, right? S&P 500 is 500 different companies, including like Apple, the big companies, Apple, AT&T, Microsoft, Amazon, Facebook, all this combined, 500 companies, 500 top companies. And that's what creates the index fund. And say even if one company goes out of bankrupt or something, right? Google goes out, and then you still fine because it's a fractional part of your $1,000 you invested on that index fund. It's probably only $10 is on that company, right? That's it. So $10 is gone. Your gain is going to be still there. And the best part of the index fund is the surplus, whatever coming extra, right, every year, that's going to be reinvested. Say if you say, for example, if you invested 1995 $1,000 on one of the index funds in 2020, you would probably have 100,000 plus. So think about that. The compounding effect, also the growth of the companies. So it's a whole lot of things going on, and that's why you put like even $1,000 now. If you are in 20s or in your teenage, put something very little amount on the index funds. Forget about it, right? It's not actively managed. It's just very passive, and then maybe in 20 years it'll be like 100 times more. That is the beauty of it. So go ahead.
No, I was going to say, like, great information. So I think it sounds like, it's going to be another separate topic. If you're going to, we can, I know that you can talk forever on that. So we'll have a separate topic on each of these different types of investment opportunities. So yeah, please, sorry about it, but please go ahead.
No problem. Yeah. So guys, you invest 50% on the index funds, 50% on the companies that we were talking about, like Exxon Mobil, right? It was on sale, and Pepsi on sale, Coca Cola on sale, and Duke Energy is one of the very good company. It also gives dividends. These are some of the companies that gives dividends too. on top of that. Even McDonald's was on sale, and it's going to be on sale coming months, coming weeks, because it's going to go down and up and down, right?
Yeah.
The market is volatile, and everybody is closed, and so there's going to be downturn coming in the stock. But keep watching. That's why, we will have a link for Webull. There are robo advisors. They don't charge you fee. And also they give you like a fractional shares. You can buy, like, you have $100, but you wanted to buy Apple share, right? The Apple share is $266 now, but you can still buy less than half of your Apple share through M1 Finance. It's like a fractional share. So we will have a link for that. M1 Finance or Webull. Those are the two robo advisors we recommend, and you could just sign up, and you can do it in your phone. That way, you don't have to use your computer and look for all these things. It actually has the graphs, nice graphs, and market. If you put it in a watch list of all these companies, like a Starbucks and Johnson & Johnson, American Airlines, Delta Airlines, and all those things. There are so many others. You could just look for the top 10 stocks to invest in motleyfool.com. Like, if you look at that, you probably get so many different companies, but you just pick 10 to 20 different companies, and then we'll also have a list of these in our description below, so that you can kind of do your own research and pick from them. And 50% invest on that. Like, for example, you have $10,000, put $5,000 on the index fund, $5,000 on the individual stocks, right? For the index funds, I would say Vanguard index funds, Vanguard, Fidelity, different companies have different index funds, but the companies are same. They have their collectively having an index fund. Fidelity, Vanguard, Charles Schwab, or any other even like robo advisors you could use, right? Online robo advisors. So that is the thing. Like, you can split up the investment and then do a dollar cost averaging, right? Because the market is volatile, so volatile now. It's 5 to 10% going up and down, sometimes even 20% every next day. So because of that, do a dollar cost averaging. So that means basically, like, you have $100, and say you want to buy Apple stock. It's $266, I said, right? But it's okay. You buy it $100. Put $100 on that today, and then tomorrow it's $240, and put another $100 there, right? And day after tomorrow it's like $200. Then you put maybe $500, because it's really low. Just put it on there, right? And that way you are actually averaging. Your average probably around $210, right? And then it's going to go, let's say it's going to go to $1,000 in 3 years, right?
Right.
So you are basically 5 times on your investment.
Like, great. I mean, just to recap a few things, I just noted down a few things that I want to highlight for basic investor who knows only the basics. Someone like me, I'm also learning from you this point. So what you're saying is something that you touched. It was like, you don't put everything in the same basket. You study the market, and you do something called, you mentioned about a watch list, right? And watch list is on Webull, M1 Finance, or in both. So when you put all those interested companies in that watch list, you can monitor their activity. Is that what you said?
Right. Yeah, you can do that, or like you can even do it in, if you have an iPhone. If you have iPhone, the stocks is it's on your homepage, right? Open that stocks, and then you should be able to see right there. You can add the watch list there. Like,
okay.
I have watch list, and then here you can see GE is low, is in red, right?
And
so
what is that app?
It's an app comes with the iPhone. It's stocks.
Oh, okay, yeah, that's right, okay.
And stocks, even you can do it in your the Apple Watch. Okay, Apple Watch itself shows that, right?
Investing, passive income is at your fingertips these days, right?
Yeah, and try to invest responsibly. Like, don't panic. Like, don't, like, your goal is to invest when it's really low. buy low and sell high, right?
Yeah.
And you don't, like, we are talking about put the extra money in there, not the money that is on the savings, not the
Right.
money that you needed for, groceries next month.
Good point.
Don't put those money in there. These are like extra money you're putting to invest in so that it grows. Like I said, if you've invested $1,000 in 1995, 2020 is like more than 100,000 plus, right? And think about that long term. That's what we like. You put 5,000 or try to put, like, maybe if you only can get $100 a week, that's still good. Like you
That's
can
still
use
good.
your phone and invest fractional shares, right?
Yeah, and yeah, and also $100 a week is a pretty good extra money, And if you multiply by four, it's like your car payment probably. But the
Exactly.
good thing is the although the market is volatile at this point, you study the market, you pick your best choices, and eventually it's going to pick up. Once this whole volatile nature, I mean, it can be volatile it can be volatile. We are talking about the stock market, but this time it's a little, tough situation. But in the end, like after a few months, it's gonna pick it up. So whatever you invest, it's going to get you where you want to be. And as long as you study well, and keep monitoring the stock market, because again, guys, this is not financial advice. We are, based on my friend's experience, and and also based on his research, we are giving all this information. And you talked about dollar cost averaging. Just to recap, Venkat, you want to just a quick recap if you're
Yeah,
under.
sure. Yeah. So take your money, like study the market, put 50% on the index fund, 50% on the individual stocks of 10 to 20 different companies, right? And then we will have some 20 different companies. You can pick
Right,
those
right.
from there, or you can do your own research. And then do dollar cost averaging and use the robo advisor. Take advantage of the robo advisor. You can do
When
a
you say
fractional
Robert Advisor, you're talking about M1 and
M1
B.
Finance and Vibo, and those are the two
Okay.
that I use. And basically, there are many like Robinhood, Betterment, and others, but
Mm-hmm.
don't worry about that. Like, we will have a link below for that, and you can just open it and use your phone. It's a phone app, right? It's not in the computer. You can still see it in the computer, but it's a phone app, and then you just go through, transfer your money from your bank, maybe $100 if you want to transfer, recurring transfer every week, $100. Just that's okay. Just do it, and then put it in 50% there. Order, you can do auto investment, right? 50% there, 50% a year. And for the index funds, you can choose like VT-SAX, VTSAX, or few other index funds that automatically recommended by the robo advisor. So you can look through that, and then do like I think I already mentioned about dollar cost averaging.
Yeah.
That means you weekly you transfer $100, $200, $1,000. You just put that in fractional shares of different companies. Say you have 10 companies you pick, and then index funds. You just divide that equally. You could just choose in that app itself, like how much you want to put, like what percentage has to be. Like if you move $1,000, this many percentage will go to this different companies, right? It's automatic. You can just schedule that, and then you can stop it whenever you're done with enough money, right? You have $10,000 invested. Now is the time to invest, because it's everything is on sale. A lot of them are 30, 40, 60% down, and that's when you buy. And again, just don't forget this quote from Warren Buffett, and great investor of this century. And you will be better off just following that, and just and then don't try to keep looking at that because you're not going to sell that right away, right? Unless
Yeah.
you sell it, you're not going to get the gains, right? But even if it goes like double in a month, don't try to sell it. You buy more,
Right.
buy more. Maybe keep on buying if you really like that company. I think that's a advice we can give. And again, this is not a financial advice. That
Yeah.
you know
Educational purposes, right?
just for educational entertainment purpose only. We'll have more of these kind of in the future, like based on how the market goes. We can give you specific tips and tricks. But this is overall about how do you invest your money during this crisis.
And if you have questions, please feel free to ask down below.
Right. Yeah. Definitely. Yeah. Just we love to answer any of your questions, guys.
Yeah, and you'll be putting the recommended industries or the companies, right?
Right. Exactly. We will have those things, and if you have any questions on them, like how we can able to answer those.
Right. Thank you so much.
Thank you, guys.